Alrighty, guys, so we have a lot of companies to break down in this video, all of which reported earnings. Some are big tech, some are energy, some are healthcare related. So we're going to go over these stocks, these companies right now, break down the numbers, what I'm looking to do with these stocks. So if y'all find value, hit that like button, make sure to subscribe. And of course, don't forget to get up to 15 stocks from Moomoo using that link down below. Once you open up an account, you get one free share of stock right off the bat. And if you deposit at least $100, you get 4 more stocks, totaling 5 stocks. And if you deposit at least $1,000, are you ready for this? You get another 10 stocks, totaling 15 free stocks. So if you want some free money, you also want to help out the channel, use that link down below. And now, cheers, guys. Let's dive right into the video. So the biggest company on the list for today is Meta stock, which I did take a little peek at right before making this video. And mind you guys, right now it's 4:13 p.m. So literally the earnings just came out. And let me tell you, Meta stock is moving. Look at this. And it's moving in the upwards direction. Let me pull it up and show you guys. META is the ticker. Look at this. It closed up 0.9% on the day, closed at 209 per share. And now after the bell, are you ready for this, guys? It is up to $229 a share. It is up $20 after the bell here, which is just remarkable, guys. That is freaking insane, which is a percentage move of around, let's see, 10%. Oh my God, 10% move here after the bell for Meta. So it looks like they did EPS of 220 on revenue of around 28.6 billion. Both of those ended up beating the estimate for EPS. It looks like here was 203, so they beat that by 17 cents. And sales again came in at 28.64 billion, which beat the 27.62 billion estimated. Holy crap, that is just remarkable there for Meta, guys. And they see Q2 revenue of around, let's see, 29.5 to $32 billion versus the 29.5 billion estimated. So the upper end of that, guidance is way above the estimate, which is great. And they see 2023 total expenses of around 86 to $90 billion, and they see 3 to 5 billion in restructuring costs related to facilities, consolidation charges, severance, and other costs there. So yeah, I mean, great EPS beat, great revenue beat, guidance is strong, and of course there's a lot more numbers that we could dive into, but we're not actually looking at the actual earnings release, which probably tomorrow, guys, I will make a video. I'll do a deeper dive video on Meta, kind of like what we did with Microsoft earlier today. Go check out that video if you haven't done so already. So pretty impressive there overall for Meta, just looking at the bare bones numbers, if you will. And after the earnings call, we'll probably get some more price action, but right now it's clearly up and away. Let's just put it that way. It's up a ton, 9-10% here after the bell. And pulling up the 4-hour chart, guys, we're now trading at another multi-month high. And if you guys didn't know, I mean, this stock has been trading at multi-month highs for a couple of months at this point, funny enough, right? We just hit roughly 220 back in the middle of this month, and we saw a pullback to about 207. Now we're rocketing off that moving average, right? You guys see the 180 SMA. We held it, we popped. Now we're at another multi-month high on Meta, which is a really good sign overall for the bulls. Now let's pull the layers back a little bit. What's the all-time high on this thing? 380, right? Yeah, 384 back from August of 2021, which eventually I think Meta's going to go back to all-time highs. Probably not anytime soon. I'm not banking on it happening anytime soon, but later down the line, it will get back to all-time highs in my humble opinion. But for the very short term here, where could we be going? I'm looking at roughly 235. If you guys notice, 235 here on the 3-year chart is right by the 180 SMA, which, mind you, we've been struggling at that point for a couple of weeks here. And it's also the high from back about a year ago, back from the beginning of April of 2022. You guys can see it right here. So if we're able to clear through this 235 level, that's going to be a massive sign for the bulls. From that point, we could start going, let me see here, 250 to 260-ish. That's a big range coming up, or a big level of resistance coming up, which held as support back in the end of 2020, heading into 2021. You guys can see right here. Did we not hold 250 to 255 for a good couple of months here. That would be the next gap to fill again if we do end up breaking past 235. So I'm going to set multiple alerts here. Let me do one at 235, mark is at or above. Then I'll do another one at 255, which who knows when that's going to hit. It might take months for all we know. I don't know, but I'm going to set the alerts either way because the alerts will always be there and they'll get triggered when they get triggered and let me know. That's kind of the point of an alert, guys. It doesn't matter if it gets triggered tomorrow or 2 months from now, as long as I have it set here and, we have the stock on the watch list, it will let us know when the alerts hit. And of course, from that point, we'll be able to make an informed decision. So that's Meta, guys, ticker symbol META. We also had Roku report today. Let me pull up Roku. What did they do today? They went down 2% on the day, and it looks like here I do have a descending triangle drawn out. That was probably from a couple of videos ago. And, it looks like that's kind of playing out here after the bell as the stock, it initially dumped. Now it's, where's it at now? Pretty much at break even, but it did get up to $62 a share at one point after the earnings came out. So talk about volatility. We closed at 56, shot to 62, back to 53. Actually, no, it looks like we went down to 53 first, then to 62. Now we're at 57. So this thing is moving all over the place after the bell. Let me pull the live news up and see what they ended up doing. So it looks like they did, where is it here? Looks like they did $1.38 in the red, so they lost $1.38, which missed the $1.37 loss estimate barely, but it did miss. And they did revenue, it seems like here, of $741 million, which beat the $708 million estimate. So they beat revenue by a nice margin there. They slightly missed on EPS. And let me see here. Roku reports active accounts in Q1 of 71.6 million versus the estimate of 71 million, so a little bit above the estimate there, which is good. Streaming hours at 25 billion versus the estimate of 24.7. Well, I guess it was 25.1 billion to be exact, which that's a beat as well. So not too bad of numbers here, guys, from Roku. The only negative is, again, they missed on EPS, and hopefully they do narrow their losses at some point in the short term. Who knows if that happens? Time will tell. I don't know when they'll be profitable. I don't even know if they know when they'll be profitable, but either way, guys, look, Roku, we have a descending triangle that's starting to play out. That's not the best sign. I would be very mindful of that and very careful. And really, I'm looking at it to reverse back over these moving averages before I even consider touching it, which at this point, we're pretty far off from doing that. So I'm going to set my alert at 63.50. And you guys probably know my thoughts on Roku. I've mentioned them before here on the channel. Probably haven't talked about it in a while, but I'm not a big fan of Roku, especially for a long-term investment. For a trade, yeah, I mean, if the chart looks decent, we have some good volume, maybe I'll consider a trade. But as a long-term investment, I don't think there's much of a moat around Roku. I think everybody does what they do. Well, not everybody, but there's so much competition, and there's not really anything unique about what they do, right? Again, there's no moat. It's not like an Apple or it's not like a Microsoft or something like that. Amazon does something very similar with the Fire Stick. You know, who else? Fubo's another competitor, which I don't think they have a moat either, really. I don't think there's a moat around any of these. What would you call it? Not a streaming service, but it's kind of like a new age cable, right? It pretty much just bunches all the apps together. You know, you have Netflix, you have HBO, you have Hulu, Disney Plus. All it really does is bunch the apps together so you have everything on one device. Then you have maybe a package where you can get some channels or whatever. It's nothing really that crazy. So long term, I wouldn't have much faith in it at all. I mean, maybe they'll get bought out or maybe they go out of business, who knows. But in the short term, and mind you guys, they're not on track to go out of business anytime soon, at least from my understanding. But I'm just thinking like 5, 10, 15 years down the line. They're probably going to be fine in the next couple of years. But long term, I mean, I think this market, I don't know, I could be wrong, but there's just too much competition, and I feel like eventually a lot of these businesses will end up merging. I don't know, that's just my thought. I could be wrong. Maybe I'm crazy. What do you guys think in the comments down below? But look, Roku, descending triangle, earnings are pretty decent, but the chart is not looking pretty. We also had Teladoc report. TDOC is the ticker, and this is, of course, one of Kathy Wood's favorite stock. She used to own a ton of shares, and I think she still owns the stock, but not nearly as much as she used to, as a lot of those shares got trimmed. I don't know if she bought them back. Quite frankly, I'm not looking too aggressively at what she does. I haven't really looked at anything she's done over the past year or two at this point. But from what I hear, TDOC is still a very big position for her, ticker symbol TDOC. And this stock went down 2.7% on the day. And after the bell, guys, look at that. It is starting to creep up to $27 a share. In other words, it is up 4.8%, which you cannot complain, especially if you own the stock. But let's be honest, most people that own this stock are heavily under the water already, because look, 3 years ago, it was at $308 a share. Not even 3 years ago. 2 years ago, it was at $308. Now it's at $25. It's down over 90%, guys. That is not good. Not good at all. So yeah, it's up, but most people, if not, I'm not going to say all people, that's not true, but most people have to be underwater at this point, down 93% from all-time high. So TDOC ended up losing 42 cents on the quarter, which beat the loss of 51 cents estimated, and sales came in at $629 million roughly, which beat the 618 estimate. And it looks like here they see Q2 revenue of 635 to 660 million versus 642 million estimated. So that's good, a little bit above the guidance there, the upper range of that guidance. Very good sign there. And it looks like here Teladoc sees full year 23 revenue of 2.57 billion to 2.67 billion versus 2.6 billion estimated. Not too bad. So coming back here to the 4-hour chart, guys, yes, we're slightly above the 180 SMA, and we have a golden cross, which is great. But I would like to see price action, pushing towards 28, preferably above $29, which you guys can see that's been resistance for the past couple of days. If I pop the 10-day chart, you'll see it, $28.50 to $29. That's been, again, resistance. So I'm going to set my alert at that point now, $29. We'll see if it breaks. If it does, from that point, we could be getting a nice, nice move, maybe back towards $32. Mid-30s, that's definitely possible. So before we talk about the next couple of stocks, guys, if you have not gotten your free stocks yet from Moomoo, up to 15 stocks, what are you waiting for? Use that link down below. Open up an account. You get 1 free share of stock. If you deposit at least $100, you get 4 more stocks, totaling 5 stocks. And are you ready for this? If you deposit at least $1,000 onto the Moomoo platform, you get another 10 stocks, totaling 15 free stocks. No joke, guys. A bunch of free stocks, link down below. And if you don't like the platform, it's not like your money is held hostage there. You can take it out, take out all your deposits, and you keep all the free stocks. And of course, it also helps out the channel. I appreciate you guys as always. So use that link down below. Let me know what stocks you get. And with that being said, let's continue on. So Hilton also reported this morning. HLT is the ticker, and this stock did not do well at all today. 3.4% in the red, down about $5-ish on the day. So they ended up doing, let me see here, let's bring it down a little bit. Again, they reported in the morning, as all the other stocks we've talked about so far just reported after the bell. So it looks like here Hilton did a revenue of $2.29 billion on adjusted EPS of $1.24, which I believe both of those beat. Yeah, both of those beat the estimates. Pretty good there. And it looks like here they see full year 23 adjusted EPS of $5.68 to $5.88 versus the $5.70 estimated. So pretty much right in line there. Not too bad. And I'm not seeing anything on revenue, but overall, again, the stock is taking a bit of a beating, which is not the best sign. I would not like this if I was in Hilton stock. The fact that we got rejected at about $150, that was the high from earlier this year, back from the beginning of March into the middle of March. The fact that we got rejected there, I'm not liking it. But then again, you could argue that we're still holding a higher low here where we're at, and we also have an inverse head and shoulders in the making. You could make that argument, but you got to realize we're right by the neckline of the inverse head and shoulders literally right now, which if we break under that point, let me draw it out for you guys, we could see that inverse head and shoulders go out the window, and at that point, we'd be free falling, maybe going to the lows from back in the end of March, about a month ago, where the stock hit about $130 per share. So don't get too excited yet, because we're seeing this inverse head and shoulders, because we're on the brinks of falling right through it. I mean, this thing is still a falling knife. We're not getting any signs of buying yet. So be patient with it. Let the dust settle. You could also see maybe a cup, not really a cup and handle. Maybe it forms. I don't know. Maybe in a couple days. We have to give it some more time. Some more price action has to play out. So that is HTL, or HLT rather. Excuse me, guys. HLT. And the next one is Boeing, ticker symbol BA, which went up 0.4% on the day, and I believe they reported this morning as well. Yeah, they're always in the morning, right? They ended up doing, let's see, where is it here? They lost $1.27 on the quarter, which missed the $1.07 loss estimate. That's not good. And they ended up beating on sales. $17.92 billion in sales versus $17.57 billion estimated. So they missed EPS. They beat on sales. And let's see here. Q1 revenue up 28% year over year. Not too bad. I mean, that's pretty good. Very good, actually. 28% revenue growth. And it says here, the CFO says roughly 75% of 225 737s in inventory will need rework. Alrighty, it looks like here he also says they expect Q2 EPS to be roughly in line with Q1. All right, and Q2 cash flow, free cash flow to be break even to slightly negative for Q2. That's what he expects according to the CFO. So if we look at the chart here, guys, you all know I've been saying this for a couple weeks at this point. Boeing's been trading flat all year, and yeah, no joke, literally all year from the beginning of January up until now, it's been trading between $195 to about $215, $220. That's where we've been trading for months, and it seems like we're still in the middle of that range. So we just have to wait and see what direction we pick. I have an alert at 225. Might as well set another one here at 195. Mark is at or below, and we'll just see where it goes from there. Let me do that now. Mark is at or below here on Boeing. We also had Hess today, guys. HES is the ticker. They ended up doing, let me pull this up and see. They reported $1.13 in EPS, which beat the $1.06 estimate. That's great. And it looks like here they also beat on sales, $2.41 billion versus $2.18 billion estimated. So double beat there for Hess, ticker symbol HES. And do we see guidance? Not seeing anything guidance related, but it says here net income declines, revenue rises. All right. So let's pull the chart up. What I'm seeing here is yet again another inverse head and shoulders. Do you guys see this clear as day? We have the left shoulder right there. We have the head right here. Oops, I butchered that. Let me redraw that, guys. Hold on a second. We have the head right here. You guys see that as we have the right shoulder right here. So now we're starting to slightly peak above the 50 SMA. We're not there yet, but hopefully we do break out of that 50 SMA again, and we start taking the highs out from the last couple of weeks here, which you guys can see. Let me show you guys this. We have been failing at about 145-ish to about $150. So if we clear past 150 on this, that's where the right shoulder is really going to start playing out. And for all we know, guys, Hess, it could be going back to 160, which was that high from the end of, when was that? January. And if that were to break, even higher is where we could be going. So that's Hess Corporation, ticker symbol HES. And the last one for this video, guys. And by the way, guys, if you stuck till the end, I appreciate you all as always. Hit that like button if you haven't done so already. Make sure to subscribe for some reason. If for some reason you're not subscribed by now, and I don't know why you're not subscribed yet, but if you haven't subscribed yet, hit that subscribe button. And with that being said, let's get into that last stock, which is Humana, guys. Let me pull it up. HUM is the ticker. This is, what did it do today? Up 0.75% rather, and it looks like here they ended up doing $9.38 EPS versus the $9.27 estimate on sales of $25.65 billion, which missed the $26.44 billion estimated. So they beat EPS, but they missed on sales. Not the best sign there, and it looks like here they raised their full year 23 guidance, which you gotta love it. Now they see EPS of at least $27.88. And it looks like here, anything on revenue guidance, I'm not seeing anything on revenue guidance. But overall, this stock went up 0.75% today. And you guys can see it's been pretty choppy lately. You know, it's been trading between $520-ish to about $475, $480. That's been the window that it's been trading in. So now it looks like we're starting to test a multi-week resistance. I mean, you guys can see right around 515. That failed. We failed at that point back in the end of February, also end of March. We did break out. We did break out in the middle of this month, but that didn't last long. Now we're about to go retest it again. So the way I'm looking at it is, all right, if we break 515, that's where we could push through for even more momentum, and we'll see if we could go to 540, maybe even higher from there. So what do you guys think? Let me know your thoughts down below in the comments. Those are some stocks that I'm looking at. If you all found value, hit the like button, subscribe, and don't forget to get up to 15 stocks from Moomoo and 12 stocks from Webull. Link down below, and check out my Patreon as well if you guys want to be a part of the Patreon portfolio. You want to see my charts and my ideas throughout the day, and if you want more access to me, Discord access, all that good stuff, so on Patreon down below. And with that being said, cheers. I'll catch you later.